I guess we can go ahead and move on to the trade desk. We got to move it.
Yeah.
I mean, 10 is less than 20, but we still have to keep it moving, I guess.
Right.
The trade desk is the second one. This is the stock that's also down about 20% since mid-February when it peaked. And it not a coincidence. The decline happened right after its earnings report. So their earnings report, it was strong, but it wasn't a blowout, is the best way I could describe it. A lot of these tech stocks were priced for that they were going to just blow the market's expectations away. Or the trade desk, they grew their revenue 26% over year, which is pretty impressive given that the pandemic caused a lot of advertisers to really pump the brakes on spending. Just to kind of give you an idea of how it rebounded, 26% year over year growth for the full year, 48% revenue growth in the fourth quarter. So it rebounded really nicely toward the end of the year. Earnings nearly doubled in 2020, $6.85 a share versus $3.69. There were over $4 billion of ad spending on the trade desk's platform in 2020, which was 34% higher than a year ago. And one of the most impressive stats about the trade desk, and they report this quarter after quarter, which is what makes it so cool, their customer retention rate has remained over 95%, I think, every quarter for the past 6 years. So what I'm watching going forward, there's a couple different kind of dynamics that are kind of working against each other in the trade desk business. The global ad spending market is about $725 billion in size. So the trade desk has about 0.6% of that right now. Huge shift into programmatic advertising, huge shift just into digital advertising. We've learned today that Google is going to be phasing out third-party ad tracking, the tracking cookie, which is potentially bad news for the trade desk. That's why we're seeing the stock get hit as bad as it is today. If you haven't seen, the trade desk was down about 10% today at last I looked. But I think that the trade desk is going to be able to adapt to that. I think it's going to be just fine. I think it can capture a whole lot more of the ad spending market. One positive thing is that margins are really the margins are really heading in the right direction in their business. I mentioned their earnings growth. A lot of that's due to the fact that net margins grew from 17% in 2017 to 29% in 2020. So that's a pretty big margin expansion. I'd like to see that head in the same direction going forward. So that's something I will be watching going into 2021. And in pretty much all of these companies, I won't repeat it for each one, but I'm going to watch how earnings kind of normalize and revenue kind of normalize in 2021. Now, I mean, you had that second quarter in 2020 that was really abnormal in one direction or another for pretty much every company in the world. So I'm going to be watching that for the trade desk and all the other ones. Are you a trade desk fan?
Yes, I am. I looked for in 2020, it tripled. The stock tripled. So, taking a little breather here. It's amazing to me, though, that, with some declining in volumes and whatnot, their margins have expanded so much. They must be getting much better at operating their business at scale. And, I imagine that could continue on that direction.
Yeah, for sure. I think they're like I said, they're doing a great job of making the business more efficient. As it scales, that'll get even easier to do. And like I said, they have about 0.6% of the global ad market right now, most of which is not migrated to digital sources yet. So I think it's going to be I think they still have a ways to go.
Yeah, this one's the set it and forget it stock for me in my portfolio.
Yeah, that's fair.